Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at CMG, SKX, NKE, and TWTR on the daily, weekly time frames. So we had that tight range. We knew an increase in volatility was likely coming on a break of that tight range, and we got it with a break of 401.50. If you wanted to be more cautious, it would be a break of 402. But a nice move early in the morning up to 408. Nice gains to be had there, over 1% to the upside. But by the end of the day, we did see a bunch of profit taking, and the high of the day was set within the first 40 minutes of trading or so. So we have a new resistance level to be watching, 408.23, and our support is clear down in the 395s. So we'll watch now how we trade within those ranges as the bulls try and recover from that bearish reaction to the earnings. But as of right now, not much follow through. The weekly middle Bollinger Band is 399.82, so it does look like the bulls have a good shot of defending and holding the back test of that middle Bollinger Band, and we have held the back test now a couple times of this level after it became support. So key $400 psychological level is lining up with the weekly middle Bollinger Band. SKX bears, we've got earnings coming up, but these bears have been all over this name for a long time. We've now seen 6 red days in a row. So nice job filling the gap. Now we're looking down at 21.33 support. Low of today, 22.30. Bullish reaction to earnings, we're going to be looking up at 26.40. Bearish reaction, we're looking at 21.33 and $20 psychological. And the weekly time frame is right at that 200-week moving average support. So how the earnings goes is going to dictate whether or not we can keep that support by the end of this week. But the overall trend has been bearish reaction to earnings. These big red candlesticks have been earnings reports in the past. So history dictates the bears likely to see follow through, and that's why we're seeing all this profit taking heading into earnings as people want out. NKE, very bullish follow through. So we need to keep an eye on NKE in reaction to the SKX earnings. But here we are back at that resistance again of $54, and it's very key and clear. 54.09, 54.12, 12.08. The 200-day moving average resistance is now here as well, 54.04. So we have a very key resistance test, and it's also lining up with the daily upper Bollinger Band and the weekly upper Bollinger Band. So it's going to require a very high volume, strong move to see follow through from here for the bulls into the mid $54 range. So we can be scouting another bearish entry from these resistances, and we will exit if the bulls are able to close and breakout mode above the daily and weekly time frame. So keep an eye on NKE. It's given us some nice bearish entry opportunities from $54 in the past. And not only do we have previous price action resistance, we have a moving average, a strong one, and then Bollinger Bands on multiple time frames. Twitter, earnings coming tomorrow. And the bulls bought the dip in a big way and saw some follow through. So we are still seeing the bulls climb higher heading into earnings. I would not be surprised to see even further profit taking tomorrow before earnings, as we have seen such a significant move over the past 2 weeks. And the overall chart certainly bearish for Twitter. A bullish reaction to earnings, we're going to be looking up at 19.84, and a bearish reaction, we're looking down in the low $16 range. So bulls still in breakout mode above the upper Bollinger Band, higher lows and higher highs continuing, and watching to see how that reaction to earnings goes. And that's that. We'll check back in on all these names tomorrow. Should see some excitement towards the end of the week for Twitter and SKX. Thanks for watching. See you soon.